All right, welcome back for the episode of Carnivore Trades. Today is Monday, November 20th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis and live day trading. Anyways, let's get into it today. So markets here, another mega rally. So Spider's almost up 1%. Triple Q's new 52-week highs up 1.3. And you see the triple Q's there, big, kind of gap and go from CPI, and then a little consolidation and pushing up here. I'm right at that 391 handle here. It's kind of tough to find a real good like resistance. I mean, there's a pivot right there, but we're piercing right now. But you do have a weekly kind of sell zone that we're kind of going into, but you have pulled back. So we'll give the Qs the benefit of the doubt here, at least right now. Also, holiday volume, right? So that's in play this week as well. We did have a bond auction today at 1 p.m. and that was the 20-year. So I'm going to look at TLT, and it was pretty good. So markets like that, obviously. I would say there, I said earlier there was a little bit of risk here because the market was just not pricing it in. But it ended up being a good auction anyway. So, if it was a poor auction, it would have been could have get interesting, maybe get some volatility, but it was a good auction. We do have 10s tomorrow. So the 10-year yield, is down today, but it's only down 19 cents there on the TNX. And I think, max downside right now for the 10-year anyway, as you guys know, it's right into this area, which we're almost into now. Another thing that I think is at least amusing is that, they're all talking about like, oh, the Fed's more likely to cut now because of the data and all that stuff. But if you look at the 210, this is just, I'm not saying this means anything here in the near term, but it's just comical. 210 spreads back to 50 basis points inverted, which is kind of contradictory. And there's the 3-month 10-year coming back in as well. 5s and 30s and 10s and 30s also backing off. I don't think this has ever happened before where the yield curve uninverted, or it's started to uninvert. You kind of had it, here it is, right? Like, 89 to 90, I guess it kind of happened there. But 99 went, right inverted. And then here it's like, point is, it's very strange that we're just kind of like reinverting at this current time. So, but the narrative here, is that, oh, the Fed's going to cut here, but the 2 years still holding up. Again, does it amount to hill beans right now? Not really, but just something that's interesting moving forward. I do think that is kind of max downside, though, for the 10-year, at least right now. 30-year, also same area as you guys know, that 4.4, 4.45, right into that like weekly 20 MA as well. So you could get some, it could get a bid there on the 30-year. I know we're at the point here where everybody thinks the market can't go down, and I'm still giving the market the upside bias into the end of the year. I don't think anything super bearish is going to happen, but we are really stretched again after all of this, and I'm just going to keep calling it as I see it. So I mean, I'm not saying we can't go higher, but we're up 400 points now, but there's your extension to the 20, and you can see we're max extended now again, just so you know. We are going into, I can do this here, got a new mouse, so all right, going into this trend line here and that 45.50 area. Said Friday that would, it's possible to happen today. And then above that, there's your gap fill, and then obviously double top. So those are the obvious resistance levels, but we'll see how this market responds tomorrow. I think a gap up tomorrow, I don't know, might be something that we could see faded. Again, when I say fade, I want you guys to understand I'm not looking for a 200 and 250 point drop here. I think at some point we'll mean revert to 4,400, maybe 43, or say 43.50. This is kind of your buy zone right here. You can see, your chop there, and that's where you broke out. And, ever since then, it's been pretty much an uncontested rally. A lot of 0DT going on here as well, but market is holding up, and you got to respect it, especially with the light volume in the holiday week here. But in any case, market's getting a bid, and we have NVIDIA earnings on Tuesday, so we'll be covering that obviously tomorrow as well. But bottom line, new 52-week highs for the triple Qs, and again, we're right into that kind of 390-20 pivot, and then really above that, it's you got this zone here that you broke down from. So I'll say 397, right? If I had to pick a level here, obviously other than double top, this is your bull flag here. by the way, epic short in 2022 for us. But right there, that's where you broke down from. So again, that might be your next level. But really, I want to see how this market reacts tomorrow after kissing this trend line. A lot of time you'll kiss it, pierce it, maybe gap up the next day, and then come back in. I know the market's strong right now. I know nobody thinks it can go down, but that's usually when it starts to come down, is when nobody thinks it can happen. So just throwing it out there, and I'll be wrong. If I'm wrong, I'm wrong. But I'm just going to trust my eyes on this one. So anyways, IWM here up 54 basis points. So that's hanging in there okay. Still got that little gap there, but pattern-wise, it's okay. Resistance is still 181.75, 182. And you got the 200 and 100 right there, but no real problems with it. If it consolidates enough, it can go higher. I think it needs to do more of it. But IWM up 0.5%, and we'll leave it at that for now. Dow making a nice outside move as well, up 62 basis points. So right into this kind of red bar, like breakdown bar here. So that breakaway gap, and we're testing that right now. But decent move here for the Dow. And again, give the market the upside bias until we get a legitimate sell signal, meaning like an outside move, preferably on volume. It's going to be hard to get volume this week, but it could happen. Maybe the 10-year flops tomorrow. Certainly a possibility. SMH, new all-time high, new all-time closing high as well. SOX here, kind of coming into this gap window here. And then, of course, the double top at 38.75 will be your next big level. But what a run there for the semiconductors. IGV also getting a bid here. Talked about this, 385 or 381. So we'll say 382. 381.59 is the low. I think it's kind of like an arbitrary number there. But either way, that breakdown area right there, that's going to be your next level. And above that, it's really up to 395 for IGV. But big move, big outside move there for IGV. And we'll see how it reacts there at that pivot. Again, it's not exact. It might overshoot by a couple points. It always does. Dow Transports here today, managing to scratch out a gain, up 35 basis points. Not a bad pattern, right? So up move, sideways, upright pattern. If you're like, I hear people like, oh, we got to buy this. We got to, like the FOMO here and like big tech and all that stuff. If you're going to buy something, I'd rather you buy something like this, right? Because you've got a nice inside bar starting to form. If it does more of that, I think this could be a laggard bull, right? You could also make a case you got to, potentially, if you just kind of dip around here, you could have an inverse head and shoulder pattern. So I'd much rather you like go long something like this than, chase Microsoft at all-time highs, right? So we know that pullback is coming, but you don't want to be a bag holder for that. Look at Apple. NVIDIA has earnings. That's kind of a wild card. Meta, same thing. I'd rather you buy something that has like potential. Okay, these moving averages can catch up. You can consolidate, and then you can make a move here because we don't know where the top is on Microsoft. It's at an all-time high. Don't know where the top is on the triple Qs right now. I mean, we can say 397 is resistance, but just point being, just seeing a lot of FOMO, a lot of hysteria out there right now. And I said there would be, last week, so the CPI move, that's the exact type of move that gets FOMO in. Just don't think we can't pull back before then. And again, when I say pull back, I have to keep saying this because I know the trolls are going to be in the comments like, oh, you're a perma short, you're a perma bear. But, just be aware of that stuff. Not looking for 200, 250 points, but you can still get bids to the downside. Anyways, 2-year yield, we talked about that briefly. So that's at 4.91. And again, that's green today. Still a bearish inside bar there, but it is up. Again, with a narrative that the Fed's cutting, it's just kind of strange to see that. If this does continue lower, it's at 4.6. 5 years a little bit on the softer side. You guys know 4.2 to 4.1 would be your downside objective there. And then the 10-year, 4.35. It's almost there. It might even get there tomorrow. And then the 30-year, 4.4 to 4.45, right in that area, is going to be pretty good support for those yields. XHB, so that is actually a red to green day, so that's holding up. I'd even rather you buy something like this too. At least it has an inside bar. It's still pretty overbought, but at least it has an inside bar pattern. Again, might need to do a little bit more backing and filling. You went to this pivot, you got a red bar above it, but it's holding up. Home builders are hanging in there just fine. And again, it's liking the lower yield. If the bond auctions are still good, it's going to help out those home builders there. You see it got a bid with everything else at 1 p.m. VNQ, even this, right? It's beaten down, so you've still got, it still could be a laggard bull. But this is an inside bar. Nothing terrible there. You're above the 50. I like that. You do a little bit more, you're consolidating beneath this 100 MA and that red bar, you can, push up to 80, 8150, maybe 82. Then there's a lot of resistance up there on the daily. But that chart looks a little bit better, up 0.5%. XLF continuing outsized move there, but it did come pretty sharply off the highs. Actually seeing a little bit of a fade across the board here in the last, a nice little dump there in the last 5 minutes here. Market makers unwinding again, a lot of 0DTE. That's what I was just talking about here. I think I told you guys on Friday. Let me look on the weekly here. Yeah, we're going into this failed kind of bull flag pattern, so that could be your resistance there on the upside. But XLF still holding up 25 bips. Not a lot of support built on this move, just a squeeze. So just be aware of that. If we do retrace, I think it can get back to 34. Or it could just, if it's really bullish, it'll hold this trend line as support on the upside. And then we'll look for that from there. But if it gets through that, it's down to 34 bucks. KRE holding up as well. I'd even rather buy this, right? Trying to hug that 200 moving average, you get above it. If it consolidates, you could get some squeezing going on. Maybe get back up to 48. So again, there's options out there, but please don't chase tech. That's all I'm asking. KBE, same thing. That can still get to this gap fill. So no real problems there. That's above the moving averages. And broker dealers can go to all-time highs. I'd rather you buy broker dealers. That pattern's not bad. You guys know I like that. And it's got the inverse head and shoulder so you can fall back on. Plus, with broker dealers, you know where your risk is, right? You only got 8 points of risk here. And obviously it's an index, but there's brokers out there you can buy. Only 8 points of risk on the downside. But if you buy Microsoft, and it fades through this double top, it could go all the way back to 340. So a lot more risk there to the downside. Just be mindful of those things. Crude here up 2% on the day. It is pulling back. I told you guys 78. It went to 78.46 and pulled back. Still get to 80. I definitely think you can still get to 80, but for right now, Bear's holding the 200 moving average. You don't want to see a lower high and a lower low on the daily. I still think this might have a bias down to the upper 60s, maybe 70 bucks. But it is getting a bid. I told you guys a week or two ago, I said I like this pattern, possibly even for a short, but I would like to see more backing and filling. And this is kind of what I meant, right? They spiked that low on Thursday and we went right back up. Like we didn't do enough consolidating to get a clean break. If we had consolidated for maybe 3-4 more days down here, then I think you'd slice right through that and go right to 70 bucks. But again, they spiked the low, we're right back up, but could be a lower high. I think max move is about 80 here in the short run. XLE here up 15 basis points, came off the highs, slight lower high there as well, but back above the 200. Again, I'm leaving XLE alone unless it gets down into the upper 70s, and then I may start to like it. Same thing with XOP. So 128, 129, 130. Again, that trend line down there, we get down there. I think that's a good level for oil expiration. And then OIH still holding up okay, pulling in off the highs. Don't want to see it lose that pivot. If it can, or if it does, it's going down to 280, maybe 290 there. CCJ still green, so that's through the 45 handle. I'm not even going to comment on this at this point. So, I mean, yeah, it's above 45. Could it pull in by the end of the month? It certainly can, but you are piercing that pivot. In fact, lots of the times it does. You'll pierce the pivot, get everybody on board, and then it'll come back down. But it's above that pivot. I'm not even going to comment on next levels on this. I just, the trend is up. It's very strong. There's lots of FOMO, and there's a lot of people buying this into the end of the year as well. Lots of managed money being forced to chase to make their benchmarks. URNM new 52-week high as well. That probably wants to go to double top. So right up in that range. But URNM and uranium also part of the FOMO trade here, along with big tech. Nat gas pulling back in. I think this wants 285, maybe even a pierce of that. I think that's kind of your level where you can get a good local bottom for another leg up in NG. Dollar index, again, kind of looks like the yield, right? So 10-year, not a lot of room to the downside here. And if we look at the dollar, we're right into our level here. So 103.50 to 103. This is kind of the demand zone. So we broke out, you retraced right there, and that's where it took off. You also got the 200-day right in this area. And on a weekly look, you can see we're right into this convergence of moving averages. So 50 and 100, and you're piercing below that right now. Doesn't mean you can't pierce below it and close back up by the end of the week. But that's where it is. So I'd say 103 is kind of max move here in the short run for the DXY. We'll see what we get here tomorrow, but dollar into some support and selling off, and that's why the markets are up. So markets closing here. So again, just below 45.50. Again, it's not a coincidence, right? 0DT, Gamma, like they're not paying out those calls. That's why they pushed it down there in the last 10 minutes. But in any case, dollar, it's good. It's gold. Kind of a nothing burger here today, down just 25 basis points. Nothing terrible. Again, if it gets above 2,000, 2025, and then 2050, a break below here takes you back down to 1,900. Silver here, down 1.5%. So back, got above that trend line that did trigger a head and shoulders. I'm going to say this is not valid on the weekly, and we did close below the neckline today, so forget that. So that daily pattern's negated. Doesn't mean it can't go up, but we're no longer looking at that and relying on it. If it can consolidate sideways, it can go higher. It's really that simple, though. Short term, I'd say 22.50. If it starts to head down, that's going to be support there. On silver futures, platinum continuing up here. Good outside move, reclaiming trend. Resistance is at 940. We'll watch for pattern there. Could be a possible little W bottom there on PL. So you look for the retrace there, and that's what you look to get in on. Palladium here, a nice move, up 2.75%, back above the 20. It is in the resistance right here. There's your breakdown, and you're back testing that now. So we'll leave it at that. Good volume today, though, on PA futures. Copper, big outside move up, so up 1.87. Going into the 200, so this will get interesting here. So I'm going to put this in on the weekly. So 37615. I know it's a weird denomination there, but that's the level. If we close above that on a weekly, I think copper can go higher. I'd have to work out some numbers. I'd just say 393. We'll just say the 100 moving average on the weekly for now. If it closes above on a weekly close, though, it's still Monday. And it is a shortened week, but we'll watch that going into Friday. There's a 200 there, so we'll look for that tomorrow. Bitcoin's still holding up, right? No issues here. You had that big outside move, then you reversed, and now just kind of continuing to grind back up. So no real issues here with Bitcoin. We can get rid of this trend line now. We'll leave this one on. That's still pretty good, at least for a short-term line. I think this one, the path of least resistance here, looks like up. It's still pretty overbought, so just be aware of that. But I don't see any real problems here, So I would say give it the upside bias to 40,000 for now. The only real problem I have with it is going into the end of the month. That Bollinger Band is still, if it tries to pump to 40,000, I think it's going to get whacked. But if it's holding up by the end of the month, it could force that band out. So again, end of the month will tell us a lot more. And obviously, the ETF news could be the wild card there, but Bitcoin hanging in there okay. The downside could start with a break of this low here, because then you have a lower low, and then if you got to hold 33.5. But outside of that, I don't see really any issues for it at all. So again, going back to the spiders, or SPX rather, so we finished up 0.75%. Let's see the triple Qs. Yeah, they came in at just a little bit off the highs, nothing terrible or nothing crazy. But that's the big trend line, and we did get a minor reaction off of that for what it's worth. And to be fair, we closed below this gap window. So we'll see what this does tomorrow and going into the end of the week. But again, markets are holding up here seasonally pretty strong. But again, just be clear, that does not mean you can't sell off. That does not mean you can't pull back. And again, just so it's said, I'm not looking for, it's not perma-bear stuff here. But you can pull back, you can do backing and filling. And I think that's likely going to happen probably into the first or second week of December, but we'll have to see if the bears actually show up. And when they do, then we can start looking at downside targets. Anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I will talk to you guys all